Well, welcome everybody. Thanks for joining this session. My name is Alex Ketter. I'm with Google, and I lead the U.S. compliance efforts at Google Payments. We're here to talk about some key trends and issues with the global regulatory landscape with financial services identity verification. As you know, identity is largely statutorily driven, regulations driven in this space, which can present a lot of issues for a rapidly moving space with stagnant regulations. So we're going to talk a little bit about some of the trends and everything. I'd like to go down the panel really quick and have each person introduce themselves, and then we'll dive in.
Great. I'm Aaron Klein, fellow at Brookings. Prior to joining Brookings, I served as Deputy Assistant Secretary of the Treasury for Economic Policy for the first term of the Obama administration. Before that, I served 8.5 years on the Senate Banking Committee, mostly as Chief Economist for Senators Sarbanes and Dodd.
And I'm Karen Gifford. Currently, I guess I would say I'm an investor and advisor in the fintech space. I'm, among other things, I'm a special advisor to Ripple, which is a payment services company for global policy and regulation. I also was chief compliance officer at Ripple early on. Prior to that, I was at Promontory Financial Group, consulting on compliance and regulatory matters, and prior to that was at the Federal Reserve Bank of New York, doing enforcement and litigation there.
Jean-Louis Schiltz. I'm a professor at Luxembourg University teaching tech law, practicing law also. And I'm a former cabinet minister in Luxembourg, was in charge of technology and defense.
I'm Michael Dawson at Promontory Financial Group, a regulatory risk consulting firm. Since November, we're a subsidiary of IBM. I look after our operations for Promontory in the Asia-Pacific region.
So I think one interesting thing we all have in common is that we're all recovering civil servants, or public servants. So don't yell too hard at us. That's we're obviously all on the other side of the coin now, trying to solve the identity issue from this side. So, but we do all bring a really unique perspective in the background, of having the regulatory experience. So. Just wanted to kick it off. We have some opposing viewpoints kind of on the panel, and then some practical real world discussions about some solutions that are in place, some with government buy-in, some with not. So I know Aaron wanted to talk a little bit about his view on the current landscape.
Right. Well, thanks. One of the first questions we had with this question of global identification is the debate about global integration versus disintegration. Broadly speaking, I think it's fair to say that after the second time in the 20th century where the developed nations spent 5 years killing each other, in the second time in the first 50 years of the second century, people said, you know what, there's probably a better way. And that better way was to allow the global integration of people, goods, services, capital, and so we all traded with each other. We traded with each other in goods, services, money, people, migration, etc., and a constant process of opening borders and doors that started with the kind of remaining superpowers after the Second World War and grew to encompass most of the developed and developing nations. That worked in the sense that the developing nations really didn't kill each other. And in fact, people became a lot more prosperous. It didn't work in the sense that that prosperity was highly unequally distributed, particularly in the last 30 years of that. And it didn't work in the sense that nations lost sovereignty. When you have global standards and global integration, that requires global agreement, and there's a tension between sovereignty and wealth. If I offered anyone here in the room infinite wealth and slavery, would you take it? On the other hand, if I offered you complete autonomy and freedom beyond your wildest dreams and abject poverty, would you take it? The question between the trade-off between wealth and sovereignty has potentially reached a tipping point In the U.S., with the embracement of American First and the election of Donald Trump, really the first person to run for president from either party in an anti-trade platform in over 30 years. Brexit and the United Kingdom prove that this is not an American phenomenon. And while we may all, on the side of globalism, have breathed a sigh of relief after the French election, let's not forget that Le Pen got more than twice the vote that her father got only a decade and a half before. So this idea that we're on an inexorable march towards global unification ought to be seriously challenged. And the debate as to whether or not this is a blip on that path or a sharp U-turn where we make a different direction, I think is very much real. And it's against that backdrop that I hate to be the Debbie Downer here, but question the very nature of where we can go forward. I'll close with leaving with this great American point. As I was going to fly the most recent time, I saw this card that said, starting in 2018, driver's licenses from these 4 or 5 states will no longer be acceptable to TSA agents. Now stop and think about that for a second. In order to board a plane in the United States, you need to show identification as an anti-terrorism measure. The federal government has no identification. You have a 9-digit number. You can't just give your social and walk on board a plane. 61% of Americans don't have passports. So we rely on states. Apparently, there are several states whose identification system is so poor, the federal government itself won't accept it. And they can't even mandate that those states change their license, besides threatening kind of some sort of bizarre inconvenience of not allowing people from Missouri to fly. Or I'm not entirely sure how they plan on doing that. But think about that as a starting point for where we are in America pre-Trump, before running ahead with this idea of global identity integration.
Right. And Karen, I know you're a little more optimistic about the current state of affairs, so let's hear a little bit about your perspective.
Sure. I'm still smiling at the thought of Aaron as Debbie Downer because it's a great image, and also I think Aaron perhaps is more open to an optimistic viewpoint than that. What we just heard would lead you to believe. I definitely am a natural optimist, so I do have concerns about some of the recent political events globally in terms of various movements or sentiments or politicians who are feeling like they want to step back from an economically integrated world. I see it more as a pause or an adjustment, and I think any period of change, and we really are in a place where technology enables a much, much more economically and financially integrated world than there has been in the past. Any moment of change has an adjustment moment when it goes from being theory to practice. And I see what's happening as a reflection of that like, oh, wait a minute, are you really saying that someone in another country is going to have say over how I live my life? I'm not so sure I'm comfortable with that. Maybe we need to relook at that. I see that happening, a lot of the conversations in Europe, the Brexit discussion, certainly some of the things that have been said in different campaigns in the US, all reflect that the reality of a more integrated world, and that you can sort of let people have these discussions when they're theoretical and be like, oh yeah, everybody's going to be in one fluid world, and then when it becomes real, there is a desire to have it adjust and reflect local preferences and local norms and values more specifically. That said, I am going to say that I expect that in the long run we are going to move to a world that is much more economically integrated, and that the technological developments that have happened recently and are happening in real time right now are going to facilitate that. just getting back to identity and financial services, I think what we have seen, probably over the past 10 years, maybe even longer, is kind of a pretty vibrant debate between people in law enforcement globally who are very concerned and at times rightfully so about being able to identify individuals and individual sources of funds moving around that not finance bad actors, and people who are trying to promote inclusion and bring financial services to people who haven't been included in the mainstream financial world. Technology is really a place where both of those kinds of concerns can get reconciled. And some of the private sector participants here, I know, are working on solutions that are really so impressive and moving the ball forward at addressing the kinds of risks that policymakers on both sides of that debate have correctly value. So bringing the cost of providing financial services down is really driven by the need for automation. Being able to identify precisely and with great transparency how funds are moving, again, something that really can be very radically transformed by new technology, moving away from what the current banking system is able to offer to something faster, cheaper, and much more transparent is definitely not just a future possibility, but a current possibility. So all of those things are very exciting. I will say, I think that at the global level, global financial standard setters are kind of behind the ball, and maybe that's normal. It probably is that. It just takes regulatory and policy people a little bit of time to catch up to what's happening in the sort of cutting edge of technology. But that friction where global policymakers may not even be familiar with what's possible, and the fact that standards don't support and reflect that, I think that's the next conversation that has to happen globally. And notwithstanding some of the bumps that we've seen at the national levels, that conversation is moving forward, and I do feel optimistic about what's to come.
I agree. There's not a lot of movement or momentum globally, but there are a lot of good regional pockets of innovation, and some of which have really good public-private partnerships, or some are completely sponsored by the governments, which, I mean, that's really what you need for full buy-in from the government, is to have a government-sponsored, but at least at minimum a government-supported solution. And we've heard a lot about some different solutions today in some other panels and stuff. But I wanted to get Jean-Louis to talk a little bit about what's going on in Europe and what you're seeing there as a trend in the partnership.
Yeah, I would argue, and unlike what Aaron did 10 minutes ago, I would argue that the question of digital identity is a technical question with huge potential. Look only at the potential it has in the developing world, and I'm going to echo what Karin has said in that context. Number two, the most annoying thing for me today when buying on the internet or doing whatever business on the internet is that I have to remember 35,000 passports, which I have to change every 6 hours. So that is a real, very high incentive for me to help developing schemes of digital identity. And even actors of the financial sector are pretty much, to put it in blunt terms, fed up with all the obligations that are being imposed on them on KYC, and they really want to offload that to a group of specialized entities, call them identity providers or identity custodians. And the trends we see in Europe in terms of regulatory developments is one that on a government-to-government basis, there's against the background of a regulation which is called EIDAS. There's a large push for making those public/public-private schemes interoperable all over Europe, so that if I'm moving from Luxembourg to France and I have to register digitally with some French administration, I can use my Luxembourg digital public ID. That is trend number one. And trend number two, we see more and more identity providers offering their services, and it happens in a context which is a little bit different than from what I can tell is the case here in the US, because both the economic actors and the consumers are very much in favor of regulating these actors in a way or another, because they firmly believe, and I think they're right, that a sort of government regulation of these identity providers adds an additional layer of trust, reliability, and security. You have someone out there whom you trust and who says that the provider you're working with is okay, and that's something which we're going to see in the next years. Legislation is being developed in several countries. The European Commission has announced a large package in March also, which points into the same directions, although it's not totally clear yet where it will exactly go. And ultimately, I think that in the context of FATF, there will be a global move in that direction as well.
It's great to hear some movement on regulatory front in Europe going on. You know, we wish we could see a little more here domestically on that front. But there's also some really interesting stuff going on right now with the Monetary Authority of Singapore. I think Michael's going to talk a little bit about that.
Thank you. So just to really pick up on this theme of trust and what governments can do to foster trust, I thought an interesting example is the work that the Monetary Authority of Singapore is doing, where they've dedicated, together with other government agencies, $100 million to foster fintech and regtech in Singapore. And that includes, as we have previously announced, joining IBM's blockchain lab in Singapore. And the current effort is really around using distributed ledger technology to support, as part of the delivery of a shared KYC platform in Singapore. We've got 3 foreign banks operating in Singapore participating in the effort under the helpful guidance of MAS. But in terms of establishing trust, one thing that's turned out to be important is that even though we believe the banks that are participating are legally permitted to share the information that they're sharing with each other, and even though we believe that the information is technically secure, the way we have engineered the platform is to have the data actually be sent to and reside on servers that are operated and owned by the Monetary Authority of Singapore. And that kind of regulatory, it really is an interesting take on the regulatory sandbox that we've heard about in other jurisdictions. But just by being willing to be the site where the data is stored has done a lot to give the participants in the effort comfort and trust that they could go ahead and proceed with this effort. I think I wanted to mention a couple of other government initiatives that I think are really important, not just limited to Singapore, but another one worth mentioning is, and I think, Aaron, this is, it's interesting in the context of your remarks, as the Mexican authorities have tried to assist entities and institutions in Mexico with the phenomenon known as de-risking, where U.S. dollar clearing institutions are dropping Mexican banks and Mexican legal entities or restricting their ability to transact. Banco de Mexico has responded by creating a domestic dollar clearing system so that 2 entities transacting in dollars together in Mexico don't need to route the dollars through New York and then back to Mexico. They can do it through the central bank. But as a requirement, in order to participate in that system, the banks must collect, use, and transmit with the message instruction the legal entity identifier, the LEI, which there's been some international consensus around using, but I think Mexico is really one of the few countries that has really taken aggressive action to make it sort of happen. So, Aaron, it's in the context of your comments around global unity and other forces that are working against that. I think it's an interesting example of both the unity around the idea that using the legal entity identifiers would be good, and then the response of a particular government to these disruptive forces.
So on that point, it's interesting. The timing is very interesting. You know, this past weekend was the second largest weekend for remittance flow of funds from the U.S. to Mexico. Does anybody want to guess what the largest week is? Nope. Largest week is Christmas. Right before Christmas. This week, anybody want to guess why it was the second largest week? Mother's Day. Everybody sends a little bit of money home to their mom. And it's a horrid fact that Trump had a idiotic and untenable attempt to, quote unquote, pay for the wall by stopping this flow of funds. And in point of fact, when Trump proposed this as a serious, air quotes, proposal by his campaign, I wrote a piece because his campaign didn't even understand that my bank doesn't know whether I'm a citizen or not. When I get a bank account, I show no proof of my legal occupancy in the United States. And the entire basis of the Trump plan assumed that because I guess they didn't understand how people get bank accounts. So it's not surprising to me that Mexico is acting, and I applaud them, especially in the face of potential poor policy choices that range from poor to incompetent on the U.S. side. So to be clear, I think I've made clear that what I see coming isn't what I think is a good idea, but nonetheless, it's still there. On the point that you raised on Singapore, the greatest data hack I ever had was on the information I supplied to the government, stored on the government servers for my time in the administration. As a member, when the U.S. government got hacked in the Office of Personnel Management, somebody somewhere around the world knows every answer that I wrote for my security clearance, which, whatever security questions you might put in for your own ID or my first pet, I guess they didn't ask me that, but they know the name of all my foreign friends. They know my drug history in college, which makes for good reading. Giving the information to the government, I get why it makes you more legally secure and comfortable, but I'm not sure from a technical perspective I'd breathe a sigh of relief.
So on that, is there any sense of consumer buy-in with the MAS blockchain project, or is it just at this point banks and the Monetary Authority?
I think the latter.
Just to pick up on a couple of things that you had mentioned, Michael, about MAS doing this effort, and it is interesting. It will be interesting to see what the consumer response to it is, and also Mexico. That's one of the trends that I see happening right now is that there's a lot of really interesting national and regional initiatives going on with identity, about specific identity initiatives, and I'd love for Jean-Louis to talk a little bit about the new European rules that really are kind of forcing portability of identity. What the obvious missing gap here is for the global financial standard setters to kind of jump into the fray and start taking some action that would enable these interesting initiatives to become more generalized.
You want me to?
Yeah, I do. Hopefully I'm not stepping on Alex's toes.
Yeah, I think that the trends we're seeing in Europe very clearly is one, making the what I call the national public solutions interoperable, so that they can be used in a number of countries, and the system is based on the European regulation, which basically says that the various governments have to notify their schemes in Brussels, and I'm speaking about under the control of the CEO of my home country's scheme here, who is much more knowledgeable on the details than I am. And the reason behind this is that the objective of the European Union is to stop fragmentation in the public sector, basically. Now, which doesn't mean that these schemes couldn't apply in the private sector as well, but the rules are crafted in such a way that if I want to use my public digital ID as a Luxembourger in France with the public administration, I have to be allowed to use it. And the text says the private sector shall be encouraged to use the same thing. So the private sector is in that sense, or at least in that specific context, a little bit lagging behind. What we see in the private sector, and I'm taking as an example the financial sector, people are being asked, or people who are members of the business community, even more so than others, to provide credentials or an ID every other day now. And they need to go through burdensome exercises each and every time because they're being asked different questions and different information all the time. And the challenge is to find solutions which are global solutions, which are portable solutions, and which are solutions which you can use more than one time, against the background that the FATF rules nowadays don't really provide for that, because everyone who is obliged by virtue of law, be it a bank or another provider, to identify a consumer has to do the exercise himself. So he cannot totally rely, I'm simplifying a little bit, but he cannot totally rely on someone else. Whereas in an ideal world, we would have these specialized regulated providers who would be taking over that task, so that I don't need to do the exercise over and over again. Maybe I have to update my information every 2 years or every 3 years, I don't know. Maybe I have to add additional information if I'm interacting with someone who requires higher credentials, but the system should be a one-stop shop where you have someone who is attesting to your identity, someone or more people that are attesting to your identity. There are many people here in the room that are working on such projects, such as the Luxembourg scheme I have been mentioning, or Friends of Global ID here. So there's many people who are working into that direction, and I think that the regulators will definitely follow the trend, or at least set a framework which will also enable the private sector to develop in a similar way than what has happened in the private sector. Just to close on that, if you ask a banker today what is the most painful exercise he goes through, that is KYC. And they just want to get rid of that and have someone else deal with it, and deal so that the bank at the end of the day pays for the service, but that inside the bank it's the tick the box thing, and we're far away from that today.
So I mean, I agree. Unfortunately, a lot of the political conversation in the U.S. is about regulatory burden, and then the words Dodd-Frank come after that, like it's just one thought. And actually, you know, if you actually think about regulatory burden, KYC, and the growth of KYC, I would argue, is actually far outstripped the growth in Dodd.
For little result.
Yeah, I agree. In fact, well, a close second to your remembering 35,000 passwords, an annoyance, is every time I try to use my ATM in a different city. I was sitting there, I gave a talk in Boston, I went to go withdraw some money, and it was denied. I had to call my bank. And I'm sitting here pressing 17 buttons till I get a live operator to ask me what my last deposit dollar amount was, like anybody can remember that. Meanwhile, I'm sitting here with a phone and an app and a thumb. And I can get into my phone with my app, with my thumb, on that same bank and move far more money than I could possibly withdraw on that little card and mag stripe in a booth without having to call and talk to somebody and tell them my mother's maiden name. And that was just good in Boston. When I went to Greece the next week, I had to call again. And so at some point, the private sector needs to solve this, because Lord knows the government won't.
So, John, just to follow up on some of the comments you made about regulating those providers, who do you see in like the global scale? If there's providers out there that can do this globally, and assuming we could get like a regulatory buy-in globally, then who would regulate those providers? Given that it's a global solution, and not every government would trust the government of another country to verify or regulate those providers.
Well, limiting my comments to the private sector, I think the obvious candidate for regulating these actors would be a financial regulator, because that's where we see the most friction in terms of onboarding of clients through expensive KYCs. With a trend from the bank that they're saying, as I said before, that they don't want to do this themselves anymore. But at the same time, they want to be assured that it is done seriously, and I think also that the end consumer would want to know that the guy who's dealing with his or her identity in a banking environment is somewhat serious. Now, the big challenge is not, I think, to find out who's going to regulate these actors, but the big challenge is how are you going to regulate them? Because if you regulate them like a bank, the business is dead, and you're regulating aspects of their business which have nothing to do with the core of their business. In my eyes, the regulator needs to make certain that these actors, call them ID custodians, comply with basic security requirements, that they have a business continuity plan in place, so that the data, if they're in trouble, can be moved to someone else without being lost, that they have proper accounts every year, and that's about it for the regulatory regime. If you go above that, you're again killing the business, in my eyes.
So I think it's worth noting that in this country and in many countries around the world, the bank regulators have the authority to do that now. So they currently have the ability to examine third-party service providers to banks. And one thing for the firms in the audience that are expanding their business to consider is proactively going to the OCC or another regulator of your clients and talking to them about what you've got in place by way of a business continuity, disaster recovery, information security, risk management program. Because although they have the authority to examine everyone that provides services to banks, that provides significant services to banks, they don't get around to actually examining every single service provider. And so if you feel confident in your risk management program and you feel that it might actually be a differentiator to go through the process with the OCC or another agency and engage in that back and forth with them.
And I think part of the issue there is the regulators can, right? But they're not out there actively. There's no separate charter. There's no separate certification for these providers. So while they might, go in as a bank service provider to one bank and audit one of these firms, that doesn't let all their other clients know that they are actively regulated.
That's precisely my point, yeah. As long as you don't have 1, 2, 3, 4, 5, 6 laid out by the legislator, it doesn't work.
All right, so I wanted to open it up to the floor for any questions. We have about 10 minutes left, I think, so I wanted to give plenty of time for questions. There's a microphone down here. Anyone wants to queue up?
Hi there. I just enjoyed the way that KYC discussion was going, and my question is, I guess around when the government puts out a regulation, they're not providing the solution for us to satisfy the regulation without having to go to a third-party service. And I'm personally very uncomfortable with the data that I'm providing, then having to leave my network, my cloud, go to a third party to get my answer so that I can be compliant with the government. Do you think the governments will ever get progressive enough to offer solutions when they put out a regulation, or are we going to be stuck in this integrator world forever?
Well, there's two aspects to the question. The question is whether, if the government puts in place a regulation, whether the regulation is result-based or whether the government also imposes the means. I'm very much in favor of a result-based legislation or regulation. Now, to your second point on data security and data protection, to put it in non-legal and non-diplomatic terms, when it comes to KYC, no one seems to be putting data protection or data security anymore in the center of the preoccupations. So when we're discussing about chasing terrorists, the data protection aspects go away. That's how life is.
Yeah, I would say be careful what you wish for. I understand the desire of certainty that I could just hand it to the government. Per my earlier point, I'm not sure the government would protect that data any better, or arguably it would be worse than the third party. The second point is having the government do it for you or handle that. It will not be as efficient as a third party that's thinking and innovating constantly in that space. Regarding the efficacy of KYC, there's some great questions. The person that I'm most familiar with who's in jail today for violating KYC is Denny Hastert, who is the Speaker of the House, who his real crime, which was a horrid one of molesting small children, is not why he's in jail 40 years after that and after the end of his political career. It's for structuring. Also, the most recent high-profile KYC case that I'm aware of involves The Situation. Can I see a show of hands here? How many people know who The Situation is? That's not bad. It's bigger than. So he's a TV reality star from the MTV show The Jersey Shore. And, you know, TV reality stars are important here in Washington in the political scene. But is the goal of all this KYC compliance to catch Denny Hastert and The Situation? Or why are we creating this? Is that the output there? And that's certainly what the public output is.
So, Alex, if I could just offer an additional perspective in response to the question, I think while I would agree that generally you don't want the government prescribing how a private sector entity should structure its business, I think the government can do a lot to show how new technologies can be used to help with these problems. So there could be pilot projects around identification in all sorts of ways. The government could use distributed ledger to encrypt the 314A names that are transmitted to banks on a biweekly basis for information. Or you could adopt as a pilot solution as a demonstration project some innovative approaches to identity in the context of tax returns, for example. And so I think the government really could do a lot by way of demonstration projects and trying to accelerate the adoption of these technologies around identity.
Yeah, I just want to echo what Michael's saying and also say I think some of the frustration that I hear in your question comes a little bit not so much from the government not providing a solution, but perhaps not being entirely clear about what it's looking for. So the messages that come out of different government agencies will be things like, we want you to provide financial services to people in a very inexpensive and inclusive manner on the one hand. On the other hand, we want you to follow these very specific and quite expensive processes for customer onboarding. And it's hard as a private sector participant to reconcile all of those messages. And also as a private sector participant, you want to have a business and grow it. And that means being able to provide financial services in a cost-effective way, right? So some of the obvious solutions to those what seem like conundrums are to find technological solutions that solve for the underlying risk and do it in an inexpensive way. So for the government to get involved in kind of testing out and demonstrating that those technological solutions exist would only be incredibly constructive.
Thanks. And Juan?
Thank you. Juan Lanos with FinTech and RegTech lead with Consensus Systems in New York, a blockchain production studio. I have a lot of questions. Some of them are rhetorical. Hi, Karen. Hi, Alex. So it seems there's so much going on with innovation and ideas about identity, shared systems, but everything. If you read every piece of statute, every statute or every piece of regulation on KYC globally, everything boils down to an unexpired government issue photo ID. So every single regulator around the world will require that of any person or entity or a beneficial owner in order to open an account or facilitate a transaction.
Not in Delaware for a corporation.
All right. Okay. So. Okay. If you, my question is, in terms of financial inclusion, don't you think that the policies or the place to start changing or influencing policy is a financial action task force or the global regulatory body for AML KYC guidelines globally? And that's one question. And how do we start thinking? How do we start influencing policy to enable other forms of identity systems or other forms of identity? And you want to answer that, Alex? Or
I was just going to agree with you that somebody like FATF does have to set the standard, because you're never going to get every government around the world to agree to change the standards for identity solutions without a global body like that, kind of forcing the hand. And it does make a lot of sense to go away from traditional ID mechanisms. And there's often two parts to identification, right? So you have the statutory requirements of collecting name, address, date of birth, social, ID number, whatever. But then there's the identifying your customer. And then it's a matter of how you're making sure that the information you're given actually identifies your customer. So that's where I think there's a lot of wiggle room today on the traditional statutory requirements. I think that's where there needs to be a lot of movement from like a FATF.
I'd just like to pipe in that FATF has tried at times to come up with solutions that would reduce the burden, the KYC burden. But it's easy to sit here and Monday morning quarterback them. But I would say that those solutions haven't been particularly adopted by national regulation, partly because they're always trying to do this thing where they're balancing kind of law enforcement objectives against inclusion objectives. And it's just always really hard for people to say, okay, we're going to give up some safety in order to have more inclusive financial services. That's just not something that's very politically palatable for people. So for agencies for entities like FATF to look to innovative technology to move both goals forward, I really think as a practical matter is the only way that we're going to see progressive change.
And one more. The evergreen problem of regulation lagging technology, right? We see in the business, in the industry, that the actual enforcers of regulation are the banks. MSPs have not been able to get accounts for decades. Prepaid companies in the mid-2000s, and now any Bitcoin or coin or chain company cannot get an account globally. So the enforcement is actually executed or carried out by the banks. So, and the reason for that is that their regulators, when they get audited, are forcing them to de-risk or reduce the risk, and the risk-reward equation doesn't work for them. So they get off of the problem rather than just managing the risks. So isn't the solution for regulators, in order to catch up, to start hiring more engineers and data scientists and fewer lawyers?
So
Yes.
on the second point, good luck. First of all, we're in a government hiring freeze, and that's one of the stupid ramifications of that hiring freeze. Second of all, it's awfully hard for the government to compete with the folks to my right and to my left in terms of hiring the highest quality folks in those fields. It's awfully challenging, one might say near impossible. And the regulators' salaries are substantially higher than the civil servants at EPA and USAID who make up the employees at this building. And in fact, the bank regulator salaries are about 30 to 40% higher than FinCEN. So at least in a domestic perspective here, You know, if you're at FinCEN and you have 5 years to go before your pension, you're almost committing financial malpractice if you don't go to a bank regulator. So within that different group, I just want to kind of close by getting to the first point. America is so backward that we allow anonymous beneficial ownership for corporate identities. So it's almost this kind of insane conversation that we're having de-risking, which, whether that's regulatorily driven or institutions afraid of regulatory action, I'm not sure, but de-risking for individuals trying to send $300 home to their mom on Mother's Day. At the same time, in Wyoming or Delaware, an anonymous shell corporation can be set up to easily move millions of dollars of terrorist financing or human trafficking or pick whatever horrid crime or poison you want. And that's totally allowed in the U.S. system with no federal responsibility or oversight.
Sorry, we're a little bit over time, so I just wanted to
I just wanted to make a comment on the provision of the ID or the passport. I agree with you that the traditional perception of KYC is KYC means give me a copy of your passport. And yet we see more and more providers that are checking the ID of people, and even more so if you look at it from a legal point of view, and sorry for giving you a legal answer and not that of an engineer. If you look at the texts, you have a number of texts which say that the customer has to provide the bank or the MSB with a document and information. And now if you use a document and information, it's difficult to argue that a document can be something else than a passport or a driver's license. And yet, you have other texts which say that the customer has to provide documents or information. And on legal provisions of that type, you can build new models which don't necessarily require you to use these scanned IDs, which can be forged as easily as, I don't know what, very easily, so to speak. So I think that in the legal framework there is room for new models, and I would even argue that the fact whether a specific text says documents and information or documents or information, whether it's either or is there's no the use of the word and or didn't mean anything at the time it was included in the text.
All right. Well, thanks so much for everyone attending, and thank you very much to the panel.